Welcome to the daily stock review of Electrovaya. Goal of this channel is to uncover the world's best stocks that have 100x potential. Be reviewing 1,000 stocks in 12 months. That's roughly 3 a day. So if that sounds good, subscribe to come along. Who am I? I'm Jack. I'm an individual investor on the journey. Just 2,500 hours in over the last 7 years. I'm sharing lessons along the way. Here's my investing process. It's 5 steps. Today I'll go over how I came across this stock and the 5-minute check that we're going to do to see if it's worth looking into further. I learned from these guys. They did pretty well for themselves over just a little while, and by following the breadcrumbs they've left behind, we should be able to follow in their footsteps. If you'd like the free resources that I wish I had when I first started, you can check those out with the link in the description. Absolutely free. So Electrovaya Inc. They on the Toronto Stock Exchange. Came across this business because I was doing a screen for small caps, so businesses under $2 billion and businesses that had revenue growth pretty high over the last 3 years. So jumped into that. Now that's where I came across it. Now what I want to do now is our 5-minute check. So I want to grab the annual report. I want to jump into that. Oh, how good. First couple of pages. Awesome. So, it's only got 2 years worth. So I'd really like to have a look at a little bit further. So what I'm going to do first is I'm going to have a look at the income statement. And I can see that, annoyingly, we'll have to go through 2 reports, but it's gone from, it's in thousands. So we're going from 16 million up to 44 million in revenue. We can see that our gross profit or gross margin has increased a lot. And if we go into the latest, we can see that it's gone from pretty much, it didn't grow too much from 23 to 24. Stayed at 44, and then it's grown again up to 63. We've got a gross margin of 20 million. So pretty reasonable trend there. So from over a 4-year period, it's gone from 14 million up to 63. Gross margin's gone from 3 million up to 19 million. So pretty you'd be pretty happy with that. Now, what else can we see? Net income. So I made a loss the previous year. What's going on here? So we've got some costs, different bits and pieces that come out there. We end up with a net income of 3.3 in the latest year against 60. So what's that? That's about, we double this number, we get close to 100. We double that, we get a bit over 6. So a little bit less than that. Probably talking about a 5% net income or gross net margin at the end of the day from our revenue. So nothing too crazy there. Like, it's not amazing for the business. Obviously, these gross margins are pretty good. Now let's have a look at the balance sheet just to make sure the business is healthy and it's not going to die a slow and painful death. Total assets, 63 million against about 30, which is fine. Long-term loan, it's got there of 20 million. So interesting. We want to see, if we're doing a deep dive, what this business is doing with that. Is it getting set up for an acquisition and things like that? All right. Now, I can see here that the business has been running a deficit, so like an accumulated loss. So this would usually be called retained earnings if it was positive. It just means the business hasn't been making a profit for very long. What else do we have? Let's go and have a look at the cash flow statement, because we want to see how rational management's being. Are they spending the money how we would want them if we were the owners of the business? So cash from operations is what are we talking here? Million? Yep, 1 million and 1.7 million. So not a lot of cash. There's obviously some expenses and non-cash charges that come out here. They get this back into a positive number. There's changes in working capital, cash provided by operating activities here. Excuse me. Far out. This cold's got me against the ropes. So where's the money being spent? So there's not much to spend. We're only talking about a small number here, but purchase of property, plant, and equipment. So they've invested a significant amount there. And deposits for Jamestown equipment. So they've spent more than they've made. So where's that money came from? We saw that we had some more debt that the business had taken on. And then here we can see proceeds from issuance of shares, 11.5 million. And what else? Proceeds from working capital facilities, repayment of working capital. Yeah, so all they do here is they just buy a little bit, they sell a little bit, and that's just to make sure they maintain their flow to cash. So that just balances it out. And what else? Nothing else really here. Interesting. So the majority of what they've done here is they've made these purchases this year. You go into note 8 in the notes to the financial statements, which should be just after this, and have a look at what they've actually purchased and what that means for the business. So what they're trying to do here is grow by using some equity. So brought diluted current and existing shareholders. Got $13.5 million in. Spent the majority of it just here. And they're hoping that that investment is then going to result in the future, more cash coming out of the business. So, is this business worth looking into further? Now, it just depends what other opportunities I've got to have a look at. So, just after, what are we up to? Just 2 weeks of doing this, 3 pretty much a day. We're up to over 40 stocks that I've had a look at. And this business is currently valued by the market at a price to earnings ratio of 88. So, current investor sentiment believes that this business is going to have a lot of growth, and so it's been priced at a premium to that. Now, if I'd done a deep dive on this business and I get to the stage where I'm up to valuing the business, which is just part of this process, we've got to do our homework on it and then be able to value it. There's no point trying to value a stock before you know any of the assumptions around the business. Then we may be in a position where 88 a price to earnings of 88 makes sense. So for me, I'm going to put this business on the analysis sheet to do a deep dive in the future. But it's definitely not the first one that I'm going to be jumping onto. Just due to the current price, fact that it's already gone up a significant amount, it's not time critical. There's no giant reason for me to jump on it today or this week. So it'll be on there and we'll just have to wait. Now, if you'd like to see these deep dives and the businesses that are in my, top tier from these reviews, I add them into the community. That's already up there. You can check that out. It's the other link in the description. And otherwise, drop any comments if you guys are already invested in Electrovaya or you're having a look at it yourself. Drop any questions and things like that down in the comments below. Otherwise, check out this next video because YouTube thinks that you'll like it. Cheers.